Welcome back. The price of natural gas has been rising since the start of the new year. There's a graph of nat gas. The February contract traded in New York. You see it's been in rally mode since the late summer months and has continued that rally early in 2025. Our next guest expects the commodity to become very popular among investors in 2025, and she's got some investing ideas in that sector and others, of course. Our guest is Diana Avigdor. She's portfolio manager and head of trading at Barometer Capital Management. Diana, why don't we start? Welcome, first of all, and Happy New Year. Why don't we start with nat gas? What are your thoughts on this commodity, which can be volatile?
Happy New Year. Yes, indeed, very volatile. And it's been in the dumps for a very long time as there's been quite enough supply. But some things have been changing in the market. Has to do with geopolitical, but also with the demand for electricity. As we expect AI-driven demand for electricity to increase quite substantially, even by the end of 2026. We've seen some positive divergences lately that have helped LNG and LNG adjacent exposures. Ukraine did not renew a transit contract with Gazprom to provide Russian gas into Europe, which takes European energy prices higher. But also, as I said, plays into the data center demand, plays into the electrification story, as natural gas will be in much demand as demand for power increases.
And a relatively new holding for clients at Barometer is ARC Resources, ARX in Toronto.
Yeah, definitely. ARC Resources is just very simply best in class and a good way to play the LNG export growth story. Last quarter they showed us a nice beat relative to expectations and guidance also at the high end on lower transport costs and lower cash costs. CapEx was just below expectations and contributed to free cash flow. But more importantly, the company also signed contracts with shippers like Cheniere and will have about 10% of their production in LNG by year end and 33% of their production by end of the decade ready for export markets. So yes, we bought some ARC Resources last week, Canadian gas producer with the best path to growing their LNG mix.
Okay, let's talk about the markets more broadly. We are just a couple of weeks away from U.S. earnings season. These will be fourth quarter results, of course. What is your take on what we might see, and what is your take on earnings from U.S. corporations through the year 2025?
Definitely, earnings have been a major driver of 2024 great markets that we've had. We've had several themes, growthy themes. Think of all the Mag 7 and so forth. Healthcare stocks, think Lilly. Think defense companies like General Guide and GD. So earnings expectations have been coming down, but they were very much high up there, something like 11%. They're now down below 10. But earnings are coming out in the next 2 weeks, so we'll see what happens there. I do expect 2025 to be a lot more volatile than 24 and 23, as we have a Trump administration that we know creates some volatility in the market. Yesterday, for example, the U.S. market dipped twice in the 6.5-hour session on that real Donald Trump tweet. So politically induced volatility here at home also with Justin Trudeau's resignation, tax uncertainty. Market doesn't like uncertainty of any kind, but it will play also into earnings as any kind of headline will come into a market that has a much higher volatility parameter in place.
Diana, always great